Welcome back. Well, it is definitely sluggish for the markets at this point in time. And I was just looking at the screen, and Piramal Pharma also stands out to me because that stock is down another 8.5%. It already came out with its numbers, but it seems as though the street is extremely unhappy in terms of the numbers that the company did release. Though it is not comparable on a year-on-year basis, revenue growth was up around 9% this time. Margins also just about in double digits. So I think the street is hoping for more from Piramal Pharma. But the other stock that we're tracking within the entire pharmaceutical space is also Lupin, which has bounced back quite smartly post what was quite a dismal Q1 FY23, where the US revenue fell to $121 million. Their margins fell to lows of around 6%. So the street was really anticipating whether or not the company would be able to come out with a Q-on-Q recovery. And that's exactly what they've reported this quarter. The US business has recovered to sales of around $160 million. Also, they have margins which have come in at around 10.7% versus that low of around 6% or close to 11%. The poll was 10.7%. So there has been definitely recovery, which the management had stated from the previous quarter, which has come through this quarter. And that's exactly what the street likes. In fact, we did catch up with the management, the top management of Lupin. Let's listen in to what they they had to say. I did start by asking Ramesh about the margins.
At the beginning of this year, I did speak about the fact that Q1 results were impacted by some stock corrections that we took, and that being done, you'd expect some normalcy to creep in insofar as sales are concerned in America. That was undoing insofar as the first quarter is concerned. Going forward, we think things should only pick up. We have a tight leash on costs, as is evident from the numbers itself. When it comes to, in fact, the SG&A spends, or for that matter, the workforce planning as it reflects in our manpower costs and the like, and the newer products, as and when it is brought into the market, that would also impact the overall results. So things are looking better. We had guided for the second quarter being better than the first quarter, the third quarter being better than the second quarter, and so on. So successive quarters would certainly look much better.
Sure. Ramesh, when you say successive quarters would look better going forward, when it comes to margins specifically, can you provide us guidance? Because at one point, the exit run rate guidance for Q4, when it came to margins, was around 17 to 18%. Are you sticking by that?
Yeah, the fourth quarter, if things go the way we are wanting it to go in terms of the products and the like, would certainly be in the range that you're speaking about.
Vinita, I just wanted to come to the US business because that seemed to have shown a strong recovery this quarter. Revenues have come in close to around $160 million. This is versus $121 million. What led to this recovery? And can you elaborate a little bit on the price pressure that you faced this quarter as well? Is the worst probably behind us?
So the business bounced back on, due to also the correction that we had taken in Q1. So there was that impact, but strong growth across both the baseline business as well as the respiratory franchise, in particular albuterol. So albuterol, we continued to grow our volumes, and share has remained very stable, growing and stable. So, a combination of both albuterol as well as the baseline products helped grow the business. We also had a couple of new product launches. We had Suprep out of Somerset, and a couple of other smaller products with the Goa clearance earlier this year that contributed to the growth. And some seasonal pickup, minor, but some seasonal pickup that we have started to see in Q2 already. The oral solid product franchise still had price erosion. So we did see some price erosion in the high single digit, but we do think that our oral solid franchise now, with a combination of the price erosion that we've already seen over the last 12 to 18 months, plus the exits that we have implemented, have been working through on products that don't contribute, to profitability, are really helping shore up our margin.
The company had guided for $200 million as an eventual sustainable run rate for the US business. You had achieved those levels maybe a couple of quarters back as well. What is your guidance? When can we get back to the $200 million level when it comes to the US business?
Once we have material new product launches, certainly as we launch Spiriva, we believe we have the potential of getting back there. Our focus, Ekta, has been very much on driving profitable revenues as opposed to just driving revenues. Back a couple of, I think I'd say it was 3 or 4 quarters ago, when we had revenues at $180 to $200 million level, we had a number of products where the margins were shrinking because of the price and margin pressures. And we wanted to, as we had shared in the last couple of quarters, we have implemented exits on products where it doesn't make sense to continue. Therefore, you will see some shrinkage in revenues. But as we launch material new products like Spiriva later this year, hopefully, FDA permitting, and other new product launches as we get into fiscal year 24, we remain confident of growing our revenues as well as profitability out of the US.
Okay. Nilesh, I wanted to come to you with regards to India. It was up around 3% year on year. The street was anticipating maybe a higher growth this time round. And there has been some amount of volatility in the past couple of quarters when it has come to India. Can you just guide us in terms of what the growth rates might be going forward?
Sure. So we're not happy with where the India business is. I think we can do better. We've always stood for better. And we're seeing the green shoots of that growth coming back. Certainly delayed. We really expected it to start picking up from Q2 itself, which has not happened so far. So sequentially, we grew by 5.8%. Year on year, we grew by 5%. But while the market grew by 8.2%, we grew only by 6.2%. So we actually grew slower than the market. Primary reason for that is the diabetes space, where the market grew 7.8. So the market's still been sluggish on the diabetic space. It's a big therapy area for us. We grew only at 2.5%. This was primarily impacted basis genericization of some of the other molecules that's been happening in the diabetes space. Not enough new diabetic patients coming on stream as well. We do see it bouncing back in the second half. So cardiac, which was sluggish, has basically gone to the 10% kind of growth rate already. Respiratory, which was growing only at few percentage points, we see double-digit growth in the second half. We see diabetes possibly running a little slower. So while we basically grew by few percentage points year on year, we grew 5%. If you look at it at a 6-month period, we grew 4%. We basically do see double-digit growth for the second half. But overall, for the entire year, obviously, that becomes a single-digit growth then. Nothing structurally broken. I think the market's bouncing back. We saw that sluggishness in cardiac. We've seen it recover. We'll see that in diabetes as well. The market is certainly resuming, and we expect to come back to industry-leading growth. Not in the second half, but certainly next year we'll have very solid growth again.
One last question. You have faced some US FDA issues. Your Pune biotech facility was issued 18 observations. Tarapur plant has received a warning letter. While you have managed to clear Somerset as well as Goa, these two probably are disappointments for the company. Can you comment in terms of where these two plants stand? What is the remediation? When do you think you'll probably be out of the woods?
So biotech, definitely 17 observations is more than the number that we should have had. It's an 8-page 483. So, we have to keep that in context. We believe that the observations are eminently addressable and that we should have a approval at the end of that as well. We're obviously disappointed with receiving the warning letter for Tarapur. And the concerns are on 2 areas. One is on nitrosamines, the levels that we have, how we assess those in our APIs, and potential cross-contamination. We put a very solid plan in place. I think in the next 3-4 months, we'll have covered a lot of very solid ground to go back to the FDA. I think there's been news on suspension of products from the facility and the like. There is no suspension. We continue to supply. This is a very important facility in the overall scheme of things for product supply to the US market.
All right, so that's about Lupin. The stock doing well in today's trading session, and commentary from the management coming in as well. But just keep an eye out on the market. The Nifty is on the verge of breaking that 18,000 mark. In fact, just about 5 points away. And that's important because we're at the low point of today's trading session. Were the Nifty to bounce, this perhaps would have been the zone for it to bounce back. Why do I say that? Because the second half of trade will be extremely crucial. It is weekly options expiry, and a couple of these options are, acting up in today's trading session. 18,100 and 18,050. Both these calls are extremely active. Bears getting on top of that. As we speak, the Nifty has broken below that 18,000 mark, and 1.5 crore shares written on the 18,100 call, 1.2 crore shares written on the 18,050 call. Bears believe that this is the zone that they have protected, and any levels upwards would perhaps see a fair amount of resistance. And were the Nifty to sustain above those levels, maybe we could see some sort of short covering. But will that come about or no? Because the 18,000 put, moments ago, it had about 9 lakh shares in open interest, which was added today, 90 lakh shares, and that has now come down to around 73 lakhs. So those put writers are actually running for cover. They are unwinding their positions. So this is a mark that I'll be watching out for. 27, 28 rupees of premium on that one. So 1775 to 18,000 is an important support zone for the markets. Just keep an eye out on that. So that's as far as the FNO structure of today's trading session so far is concerned at midday. We take a short break, come back. On the other side, we'll be discussing the second quarter earnings and outlook for PT Light with Bharat Puri, the Managing Director.